All right, before we start this time, can everybody hear my microphone? How's everyone doing today? We're going to clear up a lot of FUD on AMC, but let me just make sure everyone can hear the mic today. If the mic is still trash, I'm going to have to do it tomorrow. Maybe it's too loud. I cranked the volume up this time. Can you guys hear me? Chat, how are we sounding? How are we sounding? We sounding good today? Thank God. Perfect. I don't know why it did that last time. I have this program and I use it for modding WWE. I make characters, and every time I run it, it does something to my sound mixer and it screws everything up. So I made sure not to run it today and make any mods. But we're gonna get into AMC here. I know that the earnings results were, not what we wanted at all for Q3 here. But when I've read this email here from John, which we posted yesterday here. He breaks a lot of stuff down, but it all ends up coming down to the revenue numbers, and our revenue numbers were down a little bit. They were, we were down 60 million or whatever from last year, and that's the main difference. And when we were asked him about what's the big difference between this year and last year's quarter, he said that in the areas that AMC theaters locations were, the movies weren't as popular this year as they were last year with Barbie and Oppenheimer. So big rural areas, big urban areas, bigger cities, higher populations weren't going as much as this year in Q3. There was lower populated areas, lower populated towns going to competitors more. So, as a perfect example, I live near Rosemount, Minnesota. It's basically right next to me, and then there's Apple Valley's right next to that, and then right next to that is Eagan. It's Lakeville. But for around this area, if you want to go to an AMC, for me it's like 30 minutes away. I mean, I still do just cause I'm always gonna go support my company, but for me it's about 30 minutes away, and there's a Marcus right down the road. It's like literally 5 feet away, and that thing was packed nonstop. So that's one of the reasons why they said that. So lower populated areas were seeing movies a lot more. So Q3 exploded, but it was a lot more lower densely populated areas where AMC theaters weren't. So they didn't get as much attendance as they did, even though the box office numbers were up in that quarter. So that's what they said ended up happening. So that's why we ended up making less in revenue. One of the things that I did see on here that did concern me was the 527.4 million in cash on hand. We're going to do another capital raise. Now, before we get into the capital raise, because I want to talk about this Go Plan, because a lot of people are mistaking this. There's a lot of FUD going around. There's a lot of people saying that we're going to be raising all this capital and doing this and that. Now, there is a discussion we do need to have, because are funds being allocated in the correct way, in the correct places, when maybe they should be kept for less cash? There's things we can talk about here. So let's break in the numbers quick, and then let's have a discussion in the chat on what you guys think, because there's things that we could be doing differently for money wise. But so one of the things here they're talking about is this Go Plan. And a lot of people are freaking out because they see the 1.5 billion over 4 to 7 years. And a lot of people are going, "Holy crap, we're going to be doing dilution. We're going to be paying for all of this through dilution. We're going to be nonstop raising capital. How the hell are we going to come up with 1.5 billion just in all of this? On top of paying down debt." Well, a lot of people haven't really read all of this, and we emailed John, and John, whoops, sorry, it went lower there. John emailed everybody back. So one of the things that he wanted to explain to everybody, so he goes, it's not an incremental 1.15 billion investment. There's going to be a very little increment capital being spent over the next 4 to 7 years. This is all going to be decided on box office, is what he's been talking about. So one of the things that he's talking about is the capex. Now this is, one second here. Buddy, why do you always have my stuff? So this is going to be corporate expenditures. Now, this is going to be like upgrades on things, development. This is what you put back into your company for growth. Toward growth for your company. If you're putting a lot of money towards that, you either have expensive growth or you're doing a big boom or bust. Now, with this right now, currently, I want to show you guys. My buddy Ryan posted. I could just pull the filings up, but he already has it pulled up, pointing right there. I'm not gonna. So one of the things here for the capital expenditures for AMC last year, if you guys look, AMC usually spends around 175 to 225 million a quarter already. And that's already on capital expenditures. Like I said, it could be acquiring buildings, developing projectors, AIs, screens. Now, so that's what a lot of it's been going to is development of these new technologies that they're pushing out. Well, now that you're not spending money on development, you're now spending it on pushing it out into your theater. So now you're moving that development phase into implementation, and that is why he's calling it the go phase. So we're not going to raise any capital like he says. We're already currently spending that, and it's already in the expense reports. It's already in all of that. It's already factored into everything. So we're already doing it at a pace of 225 million to 175 million. Now, something we can talk about is lowering that number if we needed to reduce cash burn and make sure you are getting those profitable quarters, because it's like some of the things they need to be thinking is, it's like, yeah, I'm all for upgrading. Listen, I used this theater near me, this Marcus Theater. So this Marcus Theater has reclining seats. It's a very nice theater. In Apple Valley, so it's like the neighboring city. And here's the thing, Rosemount has maybe 10,000 people. Apple Valley's got like 25 or 30. Let me look. Apple Valley's got a pretty big population. What do we got? Apple Valley's population, you guys, is 55,000 people. Okay, so this is a perfect example of exactly what's going on. So Apple Valley used to have an AMC. I've been going to that ever since I've first started. We were posting that, and then eventually they ended up tearing it down. One of the things I said about that AMC forever, the main complaint, the main reason why most of my buddies always wanted to go to the Marcus Theater, it's the seats. In that AMC theater, we had the old baseball stadium. Listen, the old metal, those plastic, fucking hard. They had those old baseball stadium seats. That's what they had in there. You had to sit in that for 2 hours. Not a lot of people wanted to do that when they had recliners right down the road. So that Marcus has been thriving in our AMC, like I said, in a higher populated area. These upgrades matter. You need to keep up with your competition. One of the things that he was doing is for the last couple of years, if you pull up this announcement here, is they've already been putting these theaters in place. They've already been putting the laser projectors in place. They've already been doing the renovations, but they've been doing them to their biggest and largest theaters, which that's what you should do. That's what you should do first. Make your biggest, best theaters the best ones there. Now what they want to do, and this is how you counteract this. Now people are sitting there wondering, how do you counter what John said here? So John said, in the lower urban populated areas, like I just showed you, you have Farmington over here, there's 5,000 people. Then you have Apple Valley, and then you have Rosemount. There's just a Marcus Theater around here for all three of us. So that's 80,000 people with this one Marcus Theater right there, and that's it. That's all we have. You can go down, like I said, you can go to Infant Hills, which is where I go, right down 52 there, and then you can go straight down there 25 minutes, and then you'll hit an AMC. But this Marcus is killing it because there's nothing else around here. And that's what he's saying. A lot of these smaller areas, that's where they all went. So how do you compete against that? You upgrade your theaters that are in the areas of your best competitor, or your biggest competitors, their best theaters. You spend money and you upgrade yours and you catch it up to theirs. And now you start taking some of that, all that profit they're getting, some of the people that are going there because their theater is better. Well, now ours is just as good. Actually, ours is a little better now. and then they'll start to come to you, and now you're taking away from your competitors, and that's exactly what they want to start doing. So this doesn't happen. So now, all right, we've been closing, and another thing I want to get into here is these leases here in a second we talked about. But we've closed 108 stores or theaters. I don't know why I call them stores. We've closed 108 theaters. Now, one of the questions asked here was, why aren't we closing more underperforming theaters faster? Just get rid of these fucking things. When it comes to closing or extending or exiting underperforming theaters, it is more financially prudent to do so at the end of a lease because you can just get the fuck out of it. It doesn't cost you money. In mid-lease, you have to pay penalties, and then you still have to pay off the remaining amount of the lease in full. So for them to go out and get rid of under these leases of these theaters that are underperforming and burning cash, it's going to cost them millions and millions and millions and millions to get out from under them. They're better off right now letting these leases go. In the long run, it'll save them more money, even with what they're burning on those theaters now. So what he wants to do again, upgrade those theaters, but again, you're not going to notice any difference. They're already spending 225 to 175 million. Now, for us as us as retail or shareholders, we should be like, hey, maybe you should be spending 125 to 100, and that way you guys would have been you would have been cash flow positive. You went to burn 20 million, you would have been positive 35, 40. Maybe that's what they need to more, look towards. I mean, as you guys can see in 2019, they were upgrading like fucking mad. They were upgrading like fucking crazy. Their capital expenditures was 518 million. They were spending like mad. They were upgrading the hell out of it. They're buying theaters up, and COVID hit, and then it dropped, and it's maybe you should look at them, and that's what you should say. Hey, I get you guys want to upgrade this. I get you guys need to do this. You need to do it to stay competitive. You need to do it to get an advantage over your competitors. You need to make it so even in these urban areas or, your highly competitive areas, you can actually now keep up. So this is what AMC does need to do. They talked about in this email, he also talked, the other question was, so like I said, let me just read this part here real quick. We saw an increase in market shares in the third quarter of last year due to increase in success of Barbie and Oppenheimer. So Barbie in highly populated areas where AMC's were, that's where they blew up. Oppenheimer as well. The thing about Oppenheimer as well is it did really, really, really well in IMAX. So this also helped them perform last year. So Q3, they're saying, was kind of an anomaly on what we ended up doing because we ended up getting a massive, massive, massive amount of the box office percentage. And then this year he says you didn't really have that Oppenheimer movie at IMAX. We didn't have that big movie that took off over here in our IMAX theaters like we did last year. A lot of these, the box office was higher, but again, it was more like my Rosemont area where all those people went and they went over to a competitor because, again, they closed down that AMC instead of upgrading it. And I told you guys a year and a half ago, 2 years ago, that was their biggest, dude, that was such a big mistake. I wish we would have just said, all right, you know what? Just fix the seats. That's it. That's all it needed. That's all it fucking needed, you guys. It didn't need anything else. When you walked in the theater, it was awesome. It had a little arcade in there. It was super nice. It was super big. And all of a sudden, you would go sit in these seats, and you were like, "Ow!" God, like it had baseball stadium hard plastic seats, dude. That's all they needed was just to fix that. Get recliners in there, just get better seats, and that theater could have went from underperforming to thriving in a populated area that I just showed you. Around here, there's like 70,000 people. So that to me was a big loss on some of these we closed because we didn't end up doing this. We lost out on some good theaters because we didn't upgrade at the time. So again, this is going to be highly positive for AMC going forward. Again, one thing we can talk about is the percentage of them allocating towards capital expenditures and saying, all right, maybe stop doing as much upgrades, and again, put that away. So the next thing in this email that he talked about is capital raises. Talking about capital allocation, talking about capital raises, again, as we said on the webcast, all capital allocations are going to go towards basically putting money in our reserves and paying down debt. One, liquidity, putting more money in the bank. Two, reducing finance leverage and strengthening the balance sheet. Three, investing in our existing business. And four, investing in attractive high return growth initiatives. Again, and then he talks about how much debt they've repaid, how much they've lowered it since 2022, how they've reduced their debt, deferred rent reduction, everything else like that. They've reduced the debt $1.31 billion. They said we were able to do that while our industry box office that drives nearly 100% of our business has been at least 20% pre-pandemic levels, and they think that's remarkable. Now, again, it's all you guys insanely. I wish they would give people more credit, but hey, we all know what's going on here. But again, this email explains a lot. So again, they're not going to raise capital. Their current capex right now, their capital expenditure currently 175 to 225 million a year. If you stretch that out over the total of 7 to 4 years, there you go. You got your 1.4 billion dollars, 1.5 billion to whatever, 1 to 1.5 billion. There you go. You had not a single capital raise to go towards upgrading at all. Not a single one. Basically, he says instead of us upgrading, we're going to. The reason you do this, now let me explain why you do this as a CEO, why he does this, why this plan, why you're going to do this. He expects box office in 2025 to recover. So he goes, all right, we're going to be making more revenue in 2025. We expect our revenue totals to be around this area or higher throughout 2025. We're not worried about being able to raise capital and getting our balance sheet, our liquidity back up, get our reserves back up. So again, be prepared. There will be dilution, but again, everyone that sits there and acts like dilution is the worst fucking thing in the world. You thought that the first time when we were at $21 and we could have raised how much more? You guys see when Roaring Kitty came back and they asked him about, hey, what do you guys think about the dilution, and are you pissed that right when you did all this stuff suddenly Ryan dropped on you? And he's like, I don't give a fuck. In the end of the day, if the money goes in and it's spent right and it goes to the right places, like debt goes towards into reserves, what more do you want? You want a healthy, strong company. So again, as long as that money goes back in, it will recreate value for shareholders. Now again, can they fucking attack it? Yes. That's what they do. That is what they do. But for these people talking about now we have to have a reverse split because we now need to fucking come up with $1.5 billion through dilution, you are unbelievably wrong. There is going to be zero dilution for AMC to cover these expenses. But when you have $1.5 billion reinvested into your company, all of your theaters are going to be up to date, every single one. You should be fucking killing it when the box office returns. By 2026, AMC is going to be destroying it. Like I said, they're already projecting like a $13 billion box office. They're already projecting the biggest box office in United States history in 2026. And there's not a single moment that there will be a down second in 2026. And I told you guys this is exactly what's going to happen in 2026 because of that strike. Every single one of those production companies lost so much money. They have shareholder value. They had to come up with that value. And the only way for them to do that is to go ahead and push out as many movies as they can, big titles. And that's exactly what they did because they have to make that money up. And that's great news for us. So again, this is nothing. Everybody, this is actually good news. This is stuff you haven't even noticed. We've done this last year. We did it, like I said, it fluctuates between 225 and 175 million. But I do want to ask the chat, what do you guys think about this plan? Because again, it's not going to be dilution. What do you think? Do you think we should say, hey, maybe you should lower the number unless you're cash flow positive? That's my thought to him. If you're not cash flow positive, why are you spending this number on upgrades? Maybe lower this to like 150. Did that extra 75 million need to get spent right now? Or can you spend that when you get more towards cash flow positive, when you have more of a balance? And this way you're not diluting your shareholders because you're not. That's my question. Maybe spend this money wiser to where you're not having a net loss. If your revenues aren't as high, your expenditures need to drop quite a bit. But that's just my thought. But that's the thing, and that's the one thing we're now learning here as well through this is it's hard to project what they're going to make off revenue just off box office numbers because again, where are those box office numbers coming from? Are they coming from high urban areas where AMC's are located? Are they coming down in lower populated areas like where I live? Like I said, there's over 80, no, 75, 80,000 people right around here that only have that one small CarMax or whatever the heck. Or Marcus, sorry. That Marcus Theater right down the road. There's 90,000 people that just have that now. We got rid of our AMC, so this does make sense if you go ahead and think about it and listen to everything they said, how he broke it down. If you guys want, again, I've posted this email on Twitter, so you can go ahead and read everything he had to say. But it's always good to ask management team so people don't freak out and think that we are going to dilute into high hell and to raise 1.5 billion on upgrades. That is nothing even close. We're not raising anything. We're already spending that amount. But again, I think AMC should lower that amount to where we are profitable. If you're not going to be profitable, don't upgrade as much. I mean, that's just to me common business practice, but what do I know? But does anyone have any questions? Oh, and on Q4 right now, I want to talk about Q4. So Q4, we're at 552 million. Once Thanksgiving weekend comes, Thanksgiving weekend they project 350 million in a weekend. Then you have Mona 2 coming out. They project Mona 2 to beat Inside Out 2, which was $1 billion movie. You have Wicked. You have Gladiator 2. There is going to be, from this point on, the box office is going to be exploding. Exploding all the way through, all the way to the end. Again, we will be at about 2.6, 2.7, 2.55. Now, here's the difference between this and last quarter. Like he said, you are now having big titles. You're going to have huge titles. You're going to have Lion King. You're going to have, like I said, you're going to have Gladiator 2 is going to blow up in the bigger areas. Mona 2 is going to explode. I know I'm missing a movie. Why can't I think right now? I know I'm missing a, hold on. I'm missing a massive movie. Like, I'm missing a massive movie. I said Wicked. What am I missing? Come on, boys and girls. Help me out. What am I missing? I'm missing something. It releases in Thanksgiving weekend. I'm blanking right now. Why am I blanking right now? Stop saying Mona. Dude, Mona's going to crush it. What, am I saying the name wrong? No, I already said Wicked, dude. Wicked. Gladiator 2. Lion King. Oh, yeah, it was the Mufasa. The Mufasa. But again, after that, I don't know if Red One's going to blow up, man. I mean, I hope it does great. I hope it does great. But I don't think Red One's going to be massive. But like I said, with the future of AMC, everything's looking great now. Again, 2020, you wouldn't be doing these upgrades if you were Adam Aaron. You wouldn't be spending as much on capital expenditures if you didn't believe the box office was on the path of recovery, and you wouldn't believe it if you wouldn't be profitable in 2025, 2026, and beyond. So, again, guys, these upgrades are actually a good thing. And again, if we would have done this sooner, that would have been the difference between us saving that AMC in Apple Valley compared to now when it's actually gone. They actually bulldozed that thing. So it's now like a tile store. It's like, damn it. But one more things I want to get into, because I got about 9 minutes here, 5-10 minutes here. I just wanted to get into this Powell thing. Sonic 3, yeah, Sonic 3 should kill it. There's a couple movies out there still. Um, but I want to get into this Powell thing in the Federal Reserve because I am happy in a sense. Hopefully Trump does what he says. Hopefully he fucks the Federal Reserve up because they're the biggest criminal organization other than the fucking banks, and their purpose is to help create crime. And I want to show you guys something because this is insanely important. Look at this. So I've been talking to you guys about the. So this came out from the bank report. So we've been talking to you guys about the end game rules. Okay. These banks are so over. They have 134 billion right now in excess liquidity. Right, is what they say. That's what they have to be able to park in the repos, and that's pretty much what you're seeing. Repos are at like 144 the last I checked. So they have about 134 billion just sitting around. That's now if people are going, holy shit, that's a lot of money. That's a tiny amount of money. They were given a trillion before so they could hold on to mortgages. So they've been burning cash like fucking crazy, no matter what they want you guys to believe. If you look over here, those endgame proposals, the first endgame proposals, I told you guys the reason the banks didn't want it is they would have had to sell off assets. They would have went under. This shows you right here what would have happened. So if the endgame proposals actually went through the way they were, banks currently have 134 billion in excess liquidity. It would have dropped down to negative 80 billion. Banks would have lost every single penny that they had. Banks would have had to sell assets, and banks would have had to come up with an extra 80 billion dollars just to put on the side because that's how over leveraged they are. I want to say that one more time. Banks are so fucking over leveraged that they were going to go from 134 positive to negative 80 billion. That means that banks right now should be 214 billion more set aside basically for their exposure. That's how overexposed they are that they're not set on the side for reserves. That's in fucking sanity. So even with the new proposals, I want you guys to look at this. Even with the new proposals, this is why they're still fighting them tooth and nail. Even with the new proposals, which are 50% reduced, banks' capital go from 134 to 27 billion. They're not going to be able to make any money. And then they're going to need to margin call because they're going to make even less money as deposits are leaving and leaving. And this is at their current rate without deposits leaving. Deposits have been leaving at a pretty rapid rate. So these numbers are actually going to go down before the endgame rule even takes place. So again, these guys are not going to be able to keep this up forever. Their access, their everything is draining away at such a rapid pace. It's insane. They're going to need the Federal Reserve to print or do something to fix this. Now, Powell came out and they asked him, you know, if Trump told you to step down, would you? And he's like, no, I can't be fired by that guy. No, I wouldn't step down. The Federal Reserve is above the law, and the Federal Reserve is a joke. What they do is they basically tell the Treasury how much to print. They send them a receipt. When you want this much money to make, you know, physical money, this, they can go ahead and buy up Treasury notes, create them, and increase the money supply. So, they can sit there and basically control everything. They're a private entity. They're not a government branch. They're a private entity. No private entity should be above the president or the law or the government, and they are. No private entity should be able to be in control of a country's currency. But it is. It was created by Congress, lobbied for by banks, and who are the shareholders? The shareholders of the Federal Reserve are the banks. It's a Ponzi scheme for the banks to be able to control the money. It's a way for them to be able to come up with bank programs to bail them out, like the bank lending program, the Federal Reserve. The Feds, Powell, they don't work for you. They work for their shareholders, like every other private company out there. And their shareholders are the banks that are committing all of the crimes. I pray to God Trump fucking destroys the Federal Reserve. It will be the greatest thing in the entire history of the United States, and we go back to a gold standard. It would stop so much crime, limit the amount of the ability to press, put, I know the government's corrupt, but every other, these central banks got to go. These private entities, these private scams, because they're all above the law. Nothing and no one should be above the law. This is, Thomas Jefferson said the second this was, if the private banks ever be able to get control of currency, It's my most famous quote I send on here every time. They will conquer and rule the nation, and they will enslave and take everything, first by inflation, then through by deflation. And your fathers will grow up on a land conquered, and their children will have nothing. And that's exactly what's happening. They're stealing everything because they control everything, and they can control your politicians and control your government, and nobody can fire them. It's time for Congress to remove the Federal Reserve. They created it, they can dismantle it. I have to get going because I do have to go somewhere at 4:30 here, so I don't have as much time. I will be going live here again, but I did want to create this AMC video. I wanted to show everybody what is going on with this. I wanted to make sure everybody knew we are not going to. The only time we're going to dilute is going to be to shore up reserves and again pay down debt. It will not a single penny is going towards this. Once again, if people want to complain and say that we're spending too much on capital expenditures when we're negative, there you go. That's the discussion. Should we spend less on capital expenditures until we can get cash flow positive? But thank you guys very much for listening. Have a good day. I will be live with Peter this weekend.